the applicant's age, you are at the first blue flag called misstatement of age. The age of the insured is very important to determine the correct premium rate for life insurance. If there has been a misunderstanding about the applicant's age, the company would be acting on wrong information in setting the premium rate for the policy. Thus, whenever the company learns after the policy has been issued that the wrong age was used to establish the premium, an adjustment must be made in the amount of insurance protection proceeds the policy owner may receive upon death. Whether you are at the first blue flag called misstatement of age, you are at the second blue flag called incontestability. Through this clause, the company is given 2 years to contest the validity of the policy by reason of concealment or misrepresentation of the insured. The incontestable period will not begin until the policy has been in force for 2 years during the lifetime of the insured. The company has the right to question the statements in any application, and the incontestable clause sets that limit to the length of time that the company holds that right. After a period of 2 years of the policy being in force and the company did not raise any objection during that period, there can be no objections about the payment of proceeds at the insured's death. You are at the third blue flag called suicide. For the protection of the company and its policy owners, a suicide clause is necessary to discourage financially desperate people from purchasing policies with suicide already in mind. If an insured takes his own life within 2 years of the policy being in force, the company will pay the beneficiary a refund of all the premiums paid by the policy owner. However, if the suicide takes place after 2 years, the company will pay the full proceeds as if the reason for death was of natural cause. Great work! You are at the fourth blue flag called beneficiary. Since the policy owner's purpose in purchasing insurance is to provide for the security of the beneficiaries, it is very important to identify them clearly. Beneficiaries are the ones who will receive the proceeds of the policy. In designating beneficiaries, the first person in line to receive the death proceeds is called the primary beneficiary. Since the primary beneficiary may die before the company begins or completes paying out the death proceeds, the policy owner usually names a substitute beneficiary. The person next in line to receive the proceeds in case of death of the primary beneficiary is called the secondary beneficiary or contingent beneficiary. Policy owners can name more than one beneficiary in any category and specify how much death proceeds each one will receive. Policy owners also have the right to tell the company whether or not they want to retain or change their beneficiaries. When policy owners exercise all their ownership rights by changing beneficiaries, they designate their beneficiaries as revocable. If policy owners tell the company they want to name certain beneficiaries and give up the right to name anyone else at a later time, then they designate irrevocable beneficiaries. This affects all the contract rights, so this decision should not be made hurriedly. Unless policy owners have the written consent of their irrevocable beneficiaries, the policy owners cannot surrender the policy, borrow any part of the cash values, assign the policy, or make changes in their policy. Policy owners can regain full control of their policy if the irrevocable beneficiary gives his written consent and if the policy owner outlives the irrevocable beneficiary. Amazing! You've reached the fourth blue flag. You know you can do it. Keep on moving. You are at the fifth blue flag called settlement. Previously, claims were paid out in lump sum. However, some beneficiaries made unwise investments or mismanaged the money, and the proceeds were quickly used up. This does not solve the main problem that life insurance covers, which is protection for the deceased family against financial loss. Now, there are various ways on how death proceeds may be paid out to the beneficiaries. Settlement options are ways wherein the company can hold in trust the proceeds of the policy. The company guarantees the absolute safety of funds and keeps them profitably invested so that they will earn a fair rate of interest. The different ways to settle policy proceeds are as follows. Interest option. The company holds the proceeds for a specified period. Interest earnings will be paid out regularly and are not accumulated. The proceeds of the policy also remains the same. Fixed period option. In this option, the company pays the beneficiary equal amounts at regular intervals over a specified period of years. Both the principal amount and interest earnings are paid out. The amount of each installment is determined by the length of desired period of income. Fixed income option. If this option is selected, the policy proceeds are used to pay out a specified amount of income as long as the policy proceeds last. It pays out both the principal proceeds and earnings from interest. Life income option. Under this option, the beneficiary receives a guaranteed regular income, not for a specified period of years, not as long as the proceeds last, but for the primary beneficiary's entire lifetime, no matter how long he lives. The principal and interest are paid out with the amount of payment calculated to last a lifetime. Wow! Now you're very close to the summit and you have a clear view of the top. You are at the fifth blue flag called settlement. Previously, claims were paid out. The different ways to settle policy proceeds. The summit is already in sight. The air is starting to get thinner and the temperature is getting colder. The road is also more dangerous than before. One of your last two companions is starting to think twice about getting to the top. He decided to quit the Sun Life journey and started to descend from the mountain because he did not feel he could still go on climbing and go down after reaching the summit. It's very unfortunate he decided to quit now. Just like your life insurance policy, the insured has different provisions when the insured quits paying for his policy. Click on each red provision flag to continue your Sun Life journey and finally reach the summit of Provision Mountain. You are at the first red flag called non-forfeiture options. As long as policy owners keep on paying for their premiums, the company is compelled to carry out its promise. But what if the policy owner decides to quit paying premiums because of unavoidable circumstances? The policy owner has options to choose from when they want to quit paying for their premiums. Cash surrender value.